Hello, this is Tom Pizzuti with Trading in the Mark. Hope you're well. Today, we're going to take a look at the big picture in gold via the ETF GLD. First, a little bit of background or the primary hypothesis that lies behind these charts is that the dollar will end up holding well into this year, probably the end of the year, maybe even into next year, before any kind of significant weakness. And if that's true, that's going to be a dampener on gold. Therefore, sets gold up to trade more in a range as opposed to ready to break out and set highs over 2011. Therefore, set forth two scenarios. In the primary scenario, it's in front of you right now, have gold moving up in a leading diagonal. That is a formation that has 5 impulsive moves, but they end up overlapping each other, often kind of developing into a wedge shape. This is a perfect formation for gold to be able to begin a rise against a strong dollar, then move into a relatively modest correction, and then break out of the shift channel. I showed that happening somewhere, maybe 2.5 years away. The timing is going to be much more suspect. Don't get too hung up on that. But the overall pattern would be something like this. In the second scenario, here we show gold moving up, being bullish for the next several months, but then it actually succumbs to a strong dollar. This would be if the dollar were to, after traveling sideways, moving up somewhat, but if in case it maybe made sort of a kind of a breakout move, made a very strong finishing move, which I think it would be if that were to take place. But nonetheless, if there was a strong move, that would have a commensurate opposite reaction in gold, and then probably drive gold to a new low. Though I don't think it would be very much lower than the low thus far in 2015. It probably in the high 800s or 80s on this chart. Prefer the first scenario, hence why it's called main, over the secondary one here. But it's worth keeping it in the back of your mind that gold's not necessarily ready to lift off and break up in any kind of dramatic way, at least probably not for 2 or 3 more years. Need the dollar to exhaust itself. After the dollar exhausts itself, then that sets the stage for a more sustained gold rally. I hope you found this interesting and helpful. Please like and subscribe, retweet, and all that other kind of happy social media stuff. That'll be all for now. Till next time, good trading.